Hello everyone, this is Paul from the Pin Academy, and in today's video we're going to be learning something that has been disturbing traders. Even if you're experienced or you're just beginning, what we're going to be looking at today is one of the things that is making you not profitable or has been disturbing you for a very long period of time. So I'm going to request you watch this video until the end without skipping any part so that you can solve that problem. Maybe it's what is holding you up from being a profitable and consistent trader. So just stick until the end, right? So how many of you guys have seen a market creating a very strong level of support? You mark it and the market actually respects it for a number of times. You see the market comes here, respects it, comes back, respects it, comes back and respects it, and you're like, now the market has to blow up. No matter the time frame you're using, but the market will always do this. Only for the market to come and what most of you call it a manipulation. Now, the market rarely creates an actual manipulation. The manipulations happen because we need money to move the market in any of the directions that we want the price to go to. If we want the price to go up, we need money. The market makers or liquidity providers, actually they're called liquidity providers, need money to move the market into the direction in which they're supposed to move. If they're supposed to go up or down, they need to trap people. If they want to go up, they need to trap sellers so that they can move up using the money that they have gotten. That's what we call liquidity, right? So the market will come and create a false breakout, right? But in actual sense, it's not an actual false breakout. In actual sense, the market is testing areas that it had left untested. It doesn't matter what method of trading you are doing, whether you're using order blocks or they're using supply and demand, this will always happen to you. You can clearly observe the market came and tested this untested area and then pushed up. It just exploded up. If you can clearly see, the market just pushed up afterwards, right? Now, in most times, you're not going to be in this market if you do not understand what we're going to be speaking about today. And what are we going to be speaking about today? We're going to be speaking about liquidity and inducement. Actually, these two go hand in hand because just from the name inducement is like making you fall for something, yet it is a lie. That is the simplest way I can put it, right? So the market induces you so that you can become the liquidity. The market makes you happy to join into a move, yet it's not yet ready, then you become the liquidity. By liquidity, we are meaning money that is enabling the price to move up, right? Let's put it as simple as that. We should not complicate anything. Are we together? So this is what we're going to be covering today. And without wasting time, let's just kick off. So we're going to be speaking about liquidity and inducement. I've already described for you what inducement means, just in the simplest form. Do not try to complicate anything in trading. Inducement simply they're trying to lure you into a move that is not yet ready so that you can give up your money and they use that money to actually push the market in the right move. And the market makers always do this almost every time and every day. It will always happen, right? So what should you know about before you even get involved, before you even do analysis? There are certain things that you need to know, right? What are those? One, you need to know how to properly mark your levels. Most of us do not know how to properly mark levels. Remember, I've just mentioned to you guys, it doesn't matter what type of trading what method of trading you do, whether you're doing order blocks or you're doing supply and demand, whether you're doing resistance and support, it does not matter, right? Mark them properly. Whether you're using structure, mark those levels properly and the structure that you've identified. Then number two, what you need to do is you need to identify the flow of the market. Most of you forget this part here. You need to identify if the market is moving up or it's moving down. You need to identify the flow. One, mark the levels properly, no matter the structure you're observing the market, mark it properly. Then after that, identify the flow of the market, either you're trending upwards or downwards. Then also do not forget the minor levels. I'm going to show you how important these minor levels are as long as you're marking the levels correctly. Then also we have spoken in our previous videos. I'm just going to attach it in the card above in the top right corner. Make sure you guys watch it out. We have rules to false breakouts, how you can actually trade false breakout. And that rule we're going to be speaking about in detail, right? So do not forget the rules of the false breakout. These are the things that you must know when you're doing your analysis. Just a recap, mark the levels properly. After marking the levels properly and the structure that you're observing, identify the trend. Where is the market moving? Where is it flowing? Then also differentiate between the minor levels and the major levels. After that, put into consideration the false breakout rules, and you're most likely not going to be liquidity to push the market in the direction in which you're supposed to be moving. Are we together? without putting down these things into consideration when you're doing analysis, you're always going to be liquidity. Are we together? So now let's look at the types of liquidity that we do have, because most people do not understand the types of liquidity available, or how the liquidity actually comes about, or actually how we build it, how we build the liquidity, how you lose money to become liquidity, and your money is used to push the market into the direction. What are the different types? Now, the first type is the double bottom or double top liquidity. This is when the market will fake people. The market will start moving up, right? Then comes and people are forgetting that this area is not tested. The market starts playing around here, consolidates a bit, even pushes up, then finally comes and tests this level here. But check here, most people are entering that trades from here. Are we together? Most people will be entering that trades from these levels here, and they lose money. Now just check this difference here. It's just a small difference, but people are losing money. Millions of people are losing money, right? Most people are not putting this into consideration. That's why we're saying this is now the market will come and create this. When it does a retest here, it's creating either a triple bottom. It can come and even create a triple bottom here, right? To touch here to make it a triple bottom, or it will come and test this neckline here so that the market after pushes up. Now here, the people who have lost money here have given us liquidity. They have been induced into taking an early buy. They have been tempted. They have been made to enter the market earlier. And have been made to enter the market earlier before the market actually moves up. It's not that your analysis is wrong, but you entered at the point whereby the market was looking for money to actually drive the price up. So when you're doing analysis, make sure you put these things into consideration. So that's the first type. Also, alternatively, the market may move up like this, and then comes, starts playing here, right? Then finally, there could be a structure that is untested here, and then the market comes. It can be an order block, it can be a structure, it can be an hidden structure in a lower time frame that you've not seen. The market comes and retests it. Either it can be supply and demand, comes and tests it, and then it drops. But remember, people have been induced. They have been tempted to enter at these points here, thinking that this is a very strong level of resistance. So they are trapped here. Their stop losses are all hit. Then the market after drops. That's why you normally hear people saying, I was in that trade. The trade has left me. That's when you start panicking to enter trades along the way when it started trending, and you start losing money, right? So this is the first type. I hope you guys understand it. Now, this is how it looks like. This is what I've tried to, this is the bottom one. And then also this is done of the hidden structure. The market can create a low, lower high, a low. It induces people here, then comes and tests this level. People think that now it's going to buy, and then forgetting that there's a level of untested structure here, comes, drops, tests it, and then pushes up. Now here, the market maker can trap two sides. It can trap both buyers by creating this M here, and also trap sellers. Sellers will be looking at this M, that in actual sense, we're coming to test this untested level, and then we push up. Then also we have this opposite here, just the opposite of this one. And you can clearly observe that the market first created a top, right? Came and played here. People forgot. There could be an order block either here, then the market comes, retests, and then it drops. The same, this is just the opposite as this one down here. The market comes, makes a high, higher low, makes a high, drops down. Remember this rule of, this is what I was speaking about that we put in the previous video, the rule of the false breakout. When the market makes a false breakout, this area needs to be tested. I'm just going to attach it in the right, in the top right corner, make sure you watch it. So the market again creates like a W, traps buyers. They think because after W, the market may come and retest it, then pushes up. But actually the market has already tested this level, then it drops down. Are we together? So this is the first type. And which one is the second type? The second type of liquidity is the trendline liquidity. How does the trendline liquidity look like? You guys normally say that the trend lines don't work. The trend lines work, but you're drawing them wrongly. I'm also going to touch how you can correctly draw trend lines and what is making your trend lines wrong in the top, in the card in the top right corner. Make sure you watch those videos. So we do have this first touch, second touch. Now on the third touch, because the market maker or the liquidity provider knows that you people are waiting to have sniper entries here, what is he going to do? He's actually, you see this dotted line here, he's actually going to fake you guys out, because you people do not understand that it's not just a touch we're looking for on the third touch. We're not just looking for the touch. We're actually looking for a consolidation, or we're looking for a structure or even a pattern. Most traders are not waiting for that. So the market will consolidate as it is trapping most of you people and creating false breakouts like how I've illustrated here, then breaks back down and retests this structure here that they had broken, because this will look like a false breakout. Are we together? Originally, the market is supposed to break this low here, comes retest then, but it will attempt this. Are you seeing this dotted line here? It will attempt this break here so that it traps people. Most people will be thinking, it has now broken this structure. It has also broken and also closed above this trend line. Then most of you are trapped here. The market continues selling. This is giving us liquidity in the market. Are we together? The same applies when the market is going up. It creates a high, higher, low, high. This is the first touch, second touch. Now, the market can either come and stop here because it has broken structure, but what will it do instead? It will come and create a false breakout of this, then breaks up, comes and retests the trend line. This is again the rule of the false breakout, right? Then it continues up. Why? Why does it do this? Because people have crammed what you people have been given to see for over the many years, that on the third touch, you're just looking for an engulfing, you're looking for this, blah, 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 morning star, evening star. After seeing that, you enter and the market continues going against you. But you need a structure, you need a shape. In most cases, I want you to go and backtest. After this video, go and look at the third touches if you're using trend lines. Always there is a consolidation to create a pattern, or there's a structure, right? So this is how the trend line liquidity comes about, right? Now, which is the other type is the untested structure. This one I've already spoken about it here. This untested structure that is created by false breakout, like this one here, this one, right? This is the untested structure that we're talking about. So make sure you guys always look out for such structures, right? When you're induced and you get trapped or you get lured into being attempted to enter trade earlier, you become, that's inducement. I've induced you into that trade earlier than it should actually be. Then when you're induced and you lose money, you've created liquidity in the market, right? When someone asks you to explain liquidity, that's how you should explain it. Do not complicate it by very, very funny terms, right? So these are the types of liquidity that are available there, right? Then also, how do you actually easily identify inducement? How can you actually know that the market is going to induce me, right? Or it's just trying to induce people, not only me, but with other mini traders. First and foremost, you need to understand market is always trending, but time will come when the market is actually ranging, right? People say that do not trade the market that is ranging, but actually you can also make money when the market is ranging, right? But the best place to observe an inducement, or to know that this market is actually trying to trap people and get liquidity so that it can push or continue pushing in the direction in which it was going, right? How can you know that? By identifying the trend first. Remember the first 4 rules that we spoke about when we're starting. One of them was you need to identify the flow of the market. Now, either the market can be trending or it is changing trend. What do I mean by changing trend? The market will be trending downwards, and then it's attempting to change to start moving upwards. So this is the best part to identify inducements, and when the market is trying to get liquidity. When the market is either changing trend from down to upwards or changing trend from upwards to downwards. These parts here. So inducements and liquidity is always grabbed by the market makers when the market is trending or when it's attempting to change trend. In most cases, it's not going to do it a lot when the market is ranging. Are we together? In ranging markets, the market usually does not overdo it, but it does it when the market is trending or attempting to change trend, because the market makers know that you always want to get into the market when the market has just changed the trend, or they know most of us are trading trend continuation. So that's why they like getting people to be lured into false moves, right? So, and how does that look like? The most important part that you need to observe carefully is this part here. Most of us think that the market, after making a new high, the market must come and stop here before continuing up. This, yes, sometimes the market will do that, but actually the market has a liberty to come and push up to down here and then continues up. Are we together? The same applies for downtrend. The market makes this low, makes a lower high, makes a low, right? The market may come and stop here, yes, on the previous lower low, but also it has a liberty to come and push up to here, right? So this area here, this space here can be used by the market to induce you into making a decision that is not right, right? Actually, some people are going to be saying that these lower highs and higher lows are what is called inducement, right? But actually, it's not those levels. It's the space between the lower high and the lower low. This space here can be used by liquidity providers to cause inducement or to grab liquidity. because most people can enter from here and then they take sales, yet the market comes and tests a minor structure maybe inside here, or it even comes and tests an order block. That's why I was saying that the method you're trying to trade with does not matter here when identifying liquidity or inducement, right? So the market can come and test this order block here and then continues pushing down, or it can test a hidden structure here and then continues pushing down. Yet buyers have already been trapped, because for you know that once this lower low has been taken out on the retest, I'm looking for buys. Yet actually there's a hidden structure here, or even an order block that wasn't tested, that is going to continue pushing the price downwards. So make sure you focus on these levels, this distance here between this higher high, if you're an uptrend, the higher high and the higher low. This distance here is which the market maker likes using to create liquidity before continuing up. Alternatively, also, if the market is going down, this distance here, the market likes using it to grab liquidity before continuing down. Are we together? So this is how you can easily identify inducement and liquidity. I've told you they go hand in hand. First, you're induced before you become the liquidity, right? So I would like to show you how it actually operates on the chart. Let's take an example of CAD CHF. This is the weekly time frame. So I'm going to mark my levels correctly. So I do have this price here. Now, I want you guys to observe something. The market created an M, right? The market created this M here, right? And broke down and attempted to retest here. But what happened? Instead, the market lured people to come and start selling early into this area here, and then went and grabbed liquidity. Now, if you drop to the next lower time frame, you'll observe why this market actually went inside here to grab this liquidity. Why? I want you to just observe this, where the market stopped. I think the market stopped where there was a broken structure. You can either mark this area here, because this turning point had a structure, or you can decide to use this whole candle here, right? This was a structure that the market aggressively broke downward. So the market did not test this level here. It came and tested it, and then it dropped. Now, how many people lost money here? Because most people, after a break of this structure here, they're taking their sales here, expecting the market to continue down. But instead, the market triggered all the stop losses before actually dropping down. Are we together? So make sure you also identify those hidden structures that you can easily forget. So if you're doing analysis, consider the measures. For example, here, this slab here is the major area. This slab here, this is the major area. But also we have a hidden turning point, which is acting as structure that the market came and tested and then dropped down. Then also, what next for us? We do have the next turning point, which was this one here, the major point. But I need to observe, why did the market come inside here? Because the market had created a false breakout. When it went and tested this inner structure, came down. Now this level needed to be tested, and the market had to come and test it, right? So when it tested it again, we broke down, making this area again left untested. Are we together? So whether you're using order blocks or structures, make sure you're identifying the measures and the untested levels. So when we are to play this this trade, you'll observe that the market had to come back and test this area here. Are you observing? Before dropping down. Are we together? So here, most people will be expecting that the market will either come and just stop retesting here, or it may come and stop retesting this level here before dropping down. But you can clearly see the market went inside to test this untested structure here. Why? Because it created like a false breakout here, then came back and tested it. Now, we expect it to push down. And if we are to replay this, you will just observe that the market actually continued dropping from exactly that point. And you can see how aggressively the market dropped. Now, this is the current situation that we have on CAD CHF. Again, you can clearly see the market has broken here a major level, right? The market has broken a major level here. But do you have any inside structures? Yes, we do have inside structures, because we have this turning point, we have this turning point here, and also we have a structure in between here of these turning points here. So there are higher chances actually this price could actually come here before even continuing to push down. This is how the market moves. It moves while creating room for grabbing liquidity, for getting liquidity to keep pushing the market down. Without liquidity, price will not move. And how do we get liquidity? We get liquidity by inducing people to take trades when they are still premature. That's how we get the market to move smoothly. Or sometimes that's why you see the market makes these aggressive movements, because very many people have been trapped and the market maker has the money to push the market smoothly, right? So I hope this video made sense to you and you got value out of it. If you did, and if this is what has been making you struggle, I know this is one of the reasons why people do not actually become consistent. So it was one of the videos that was requested by you guys. How can you identify liquidity? How can you identify liquidity, inducement? They're all actually the same thing. They move hand in hand, right? So if you were one of the people who wanted to identify why sometimes you take trades, your stop losses are triggered, and then it moves in your direction, this is one of the reasons. There are very many other reasons that we shall be talking about in the upcoming videos. So make sure you subscribe in case you have not, and also if you got value out of this video, give us that thumbs up button so that also other people can come across it, right? That's it for this video. I hope you guys have a great day.